Good morning, everyone. How's everybody doing? Hey, Redbeard, Raj. Good morning, good afternoon, wherever you are. Ready to go? Yeah, I think I missed the train here. I was looking for inventory to correct lower, but no such luck. Thought we could get some cheap paper, but not yet. Hey, Jeff, how are you? Good to see everybody. Welcome, welcome. Welcome to the Trading Syndicate. I'm JJ, and this is where we try and prepare traders for the trading day ahead. Now remember, folks, today is a short day, right? Remember, remember, remember. Okay. U.S. markets will be closed early on Thursday. Okay. And will be closed Friday. It's the biggest holiday of the summer. And then, of course, we have September 1st, Labor Day, coming after that. So, but for right now, markets are in a bit of a celebratory 4th of July mood. We just had our little fireworks display. As the news came out, you could see really clearly that I would say you took those old highs under 62.84. You can see that most of the inventory is under 62.84. Hey, I am listening. What's going on? So when the market gets back down to 62.84, you're going to see some responsive bids. Right? Now, why would that be? Well, because anybody who's short under 62.84 is going to be bid to cover in this area. Okay, so that's our map of the neighborhood, right? Or not map of the neighborhood, map of the city. Overnight inventory is fairly long. Most of the trading is above yesterday's close. We already corrected inventory up. What does that tell you? When a market goes like this, when inventory is long instead of doing this, that means that there is quite a bit of short covering in this area that pushed the market up to 62.96, almost 6,300. So what's probably going to happen now is if you just drew a line at 84, we're going to try and move this product here up here. Right? So a little bit of distribution. That's my number one scenario. Whether that happens or not, I don't know. If we're lucky, we get some liquidation on the way down. That would be helpful. Right? But for now, you're just going to see back and forth, I think, from 62.88 to 62.90. And let's go take a look. Yep, there we go. So there is, see that 62.84 I was talking about? When we took the old high in W period, it created this big short squeeze. And that overnight point of control is around 3,500 contracts down at 62.81. We're going to try and move that up here and get some good distribution. JJ, what timeline of life will this market correct since April Macrofest has been limit to the sky? Here's the problem with a correction, Rolly. This April-May move, it flushed out a lot of overhang. It flushed out everyone long over 54.71. Even people who were long over 51.28, it just pounded them all out of the market. Large size wholesalers and big traders, they got their inventory here, and it's been just a steady markup. So that correction that we're looking for, it's already happened. Now we're looking for a correction for this. So I can't tell you when it's going to happen. All I can say, right, is look for the backside of the move. So say we go like this, and we go higher, and then come in and do something like that. I'll look for the backside of that move. We're still in the front side, right? We're still in the front side of this move, which makes it, shorting this market is like going to the dentist and having a root canal, but them not using any sort of like pain management. It's literally like getting a root canal without any freezing. It's painful, right? Hey, Anne-Marie, how are you? Shorts are getting crushed. Anne-Marie, I must apologize to you. We've been trying to get you on with me in these morning shows. The kid who was supposed to be helping us with it, his father, I think, almost passed away, so he's disappeared and no one else has been able to help me with the software. So I apologize sincerely to you about that. We can't wait to get you on here, but I have no idea. He set it up and then disappeared, so I apologize for that. It's really a horrible market to try and short, right? It's not set up to short. If you actually did an analysis of the U.S. market, you know how a house is structured, right? There's a basement, and then they have a basement and a foundation, the first floor and the second floor. If you look at how the U.S. market is structured, if you actually look at the mechanical structure of the U.S. market, you will see that it's really not meant to be shorted. You'll see that it's not really built for short sellers. You'll see that they actually changed and enacted laws 20 years ago to prohibit short selling, to make short selling more difficult, to make it more economically dangerous, right? So they've actually created a market where short selling is really not a good way to make money, right? It's great for penny stocks and things like that, and companies that dilute and things like that. But you have to understand, what do you need for a market to go down? And we should talk about this because it's, since they're doing some distributing up here, right? What do you need for a market to go down? You need sellers. And you need those sellers to compete in lower price. If you don't have sellers competing in lower price, how are you going to move price down? Right? You need selling competition. Right? You need constant selling competition. Right? So what happens in constant selling competition? Right? You get, I go to sell, Anne-Marie undercuts my price, Truth undercuts both of us, Travis goes and undercuts all of us, I Am Listening goes here, Lear goes here, Rolly goes here, and we're all competing because the buyers are leaving the store and we're trying to capture those buyers. So very hard to trade those kinds of moves when this part of the move isn't happening. What happens is we do this, and then we do this, and then we do this, right? And this little move down is like a head fake. And it gets everybody short here, which helps push higher. And then it happens again, and then everybody gets short here, and then we push higher, right? That's what's happening. Every little down move, everybody just piles into this move, right? Everyone just piles into this. And that helps push higher. And then everybody just piles. These are what we call backfills, right? These backfills are like little sales to entice buyers. But people who don't know what a backfill is, they short the holy living heck out of these little dips, and they help propel the market higher. Because when they go to cover, whoop, price goes up, right? It's the oldest trick in the book. It's just that nobody ever talks about it. I mean, in how many trading rooms have you guys heard of the backfill? Right? It's got to be simple, folks. Right? It's got to be simple. These things are not complex. They want you to think they're complex. You know why? Because they want you to go, hey, you know what? I'm too stupid to manage my own money. I have to give all my money to a money manager. Right? They want you to think, so they use all this double talk and make it sound so complex that you just go, here, take my money. I'm not smart enough for this. Wrong. You are. All you have to do is know a little bit, right? See, there you go, Lear. You can short the backfill, but just know when to cover, right? You can hit that backfill, short 92, buy 89. You clip in and out of it, right? But you don't go, oh my God, I'm going to mortgage my house and go short here, right? And that's what we do at the trading syndicate. So my whole thing, and I'm going to work on some new stuff this weekend because I've got nothing to do, and it's not really a long weekend up here in the UK. So what I'm going to do is I'm going to work on some new things for equity trading. I've found some nice ways to do a little bit of trading. I tested it yesterday on that kooky penny stock. Just common sense stuff that we're going to try and incorporate and help people make sense of trading and also investing, where you can use common sense things to look at a company, common sense ways to figure out if a company is actually healthy or not. You know, that's not in the press releases. That's where the chart's telling you the health of the company. Things like that, right? So we're going to be working on all of that stuff, and because we're always trying to improve the content of the room. We'd love you to come and join us at the Trading Syndicate. There's a 25% off code. Please use that. And we'll help you with those funded accounts like Apex Trader. They've got a link in the description so you can, get a deal. And that's the big thing, is a community to help each other try and muddle through and make sense of everything, right? Yeah, so when the sellers compete, that's when you go short. The best way to become a good short seller is to learn how to go long. Now you're going to think I'm nuts, but that's okay. The best way to learn how to sell short is to go long. But you just don't close your eyes and go long. You go long and you look for competition. So I buy something at $5. I want to sell it at $6, but Lear and Rolly and Jerry and Hank, they're all selling at $5.99. So I'm going to have to go $5.98 if I want to get rid of my inventory. Now that's the start of selling competition, right? So until you learn how to recognize when competitors are selling, you know how they say it's a battle between the longs and the shorts? It's not a battle between the longs and the shorts. It's a battle between the sellers to capture the buying. And anyone who's ever worked a large order on a trade desk will know this. Your client gives you an order to sell 200,000 shares of a stock. You go out there and start selling. Next thing you know, everybody and his dog is undercutting your price. You're like, wait a minute. Now you understand what selling competition is. Right? So I take that experience and try and educate folks and keep it simple so you have a method of doing this where you don't, where you're not getting stopped out all the time, or when you do get stopped out, you learn from it, right? Now, where is VWAP? Just want to make sure I've got VWAP anchored at the right place. Everything's got to be practical, right? Teaching people all sorts of esoteric lingo and all that stuff, it doesn't help them, right? It just confuses them. It's just like having a 15-page trade plan. That's not going to help anybody, right? You can't have War and Peace as a trade plan when you're trying to execute. It's not going to be helpful, right? Right? If you've got a 10-page trade plan, how are you going to keep that in your head while you're trying to execute? You're not. It's not going to work, right? It has to be simple. So VWAP is at 6283. We get rid of it now. It's clogging up the screen. Nice, simple, clear charts, right? We have our sellers are right here. Right? Knowing where the sellers are helps. Yeah, it's hard enough to execute a simple trade plan, right? Complicated trade plans are about as useful as a poopy flavored lollipop, right? Just completely useless, right? You've got to be able to execute. You have to be able to execute and do it almost where it becomes like second nature. And what has to become second nature is getting out of bad trades. Right? So what we do at the Trading Syndicate is we teach you what the business reason for getting in a trade is. So for example, right, say I want to go long here, right, because it's a look below and fail of 89 and a quarter. So say I'm taking a long position here, right? Right. So you're long 89 half, 89 3/4. Now, what is the chart telling you right away? Right? I'll put my stop here, right? I know that there are sellers at 90. I know that there are sellers at 91. So I realize that it might be a little bit of a chop fest as I go from my entry, right? My target, that's my first sort of, if I was on the subway, this is my first stop. Right? This is the first stop on the subway. This is the second. This is the third. So if I buy 3 contracts here, I'll put one for sale here, one for sale here, and one for sale here. Because here's the thing, folks. How do size traders trade size? They buy a position and then they offer some out. If the offers get taken, they know that there are buyers. Listen, what's the point of buying something at 89 and a half and wanting to sell it at 95 if nobody's willing to pay more than 91 for it? What do you think? So I'm long 89 3/4. offered at 90 and 3/4, and I'm out one at 90 and 3/4. Now the second contract, right, I'll offer out at like 91 and a quarter, 91 and a half, to see if anybody wants to buy that. Right? So you actually, you know how they say monitor for continuation? You monitor for continuation by using your sell orders if you're long. So if you're long product at 89, 89 and a quarter, right? Put your sell orders in so you know whether or not anyone wants to buy it. Because what's the point in buying inventory that nobody wants to buy? Once again, simple, practical. And it makes you money. Now, if you want to hold trades longer, that's great. But what if the price never gets there? Or what if the swings are so big before it gets to you, it takes out your stop 3 or 4 times? That's why when you're first learning how to trade, learn how to do something simple. Learn how to make a little bit of money consistently, right? And learn how to keep that money without blowing it all up at the end of the week. Does that make sense? And then build on that. As you gain skill, then you can be able to hold positions. As you grow your account size and your capital, right? So now my second contract is sold. And if I had a third contract, it'd be for sale before 93 and a quarter. So that's the look below and fail. What's the business reason for the trade? The business reason for the trade is the sell orders that took us under 89 and a quarter are complete, right? That's why that term unfinished business is the worst thing in trading. That business is finished. The market does not need to sell under 89 and a quarter and rotates higher, right? Yeah, that was in the trade. Pretty simple, right? Right? So you buy a couple of contracts and you put them for sale. If nobody wants to buy them, right? So if you, yeah, so if you go to buy 2 contracts and you only get filled on one, what does it tell you? You use your executions to tell you what's going on. The chart will only give you so much information. Your execution will tell you the rest. It will give you the rest of the picture. But you have to be able to zone into that. You can't just get into a trade and then all of a sudden your eyes glaze over and all you think about is how much money you're going to make or lose. You have to pay attention to the market and what the market's giving you feedback, right? Every second, every millisecond that market's giving you feedback, right? You use your orders to give you feedback. That's what you do when you're trading size. If I'm trying to sell 1,000,000 shares, I'll put orders out and I won't like put an offer for 1,000,000 shares on the DOM because everybody will see that and go short. So if you're trying to buy a big position, you might show a little bit of big buying on the DOM and people will get all sucked in thinking there's a big buyer. And then you're on the offer, they'll come and buy all your position. They won't even know it. Get what I mean? Now, I'm not telling you to do that because you can't. You're a retail trader. But that's how large traders trade, right? So if, I want to sell the 92s, 93s, I might go and show, 100 contracts at 90 bid, and stack some bids under there and show some big bids. Then all the idiots will think that there's a big buyer and run in to buy the thing and try and front run the buyer and I'll sell. Thank you very much. Thanks for coming out. Right? There you go. Right? That's called making a market. Right? So that look below and fail of 89 and a quarter tells us that there's nothing for sale under 89 and a quarter. So if you ever hear people say unfinished business, take that word and throw it out. Because a lot of people will say there's unfinished business at a level, and that will get people thinking that it's going to return to that level, and so they'll be shorting it. Don't do that, right? Unfinished business means you need help going to the bathroom, okay? Right? The orders under 89 and a quarter are complete, right? The sellers realize they don't have to sell under 89 and a quarter. They're going to lift the offers to take advantage of the fact that buyers want to pay more, right? And you'll see the market will just go right to the levels to the tick and stop. Right? The levels work because they're based on inventory and cost basis. Now, if you're a trader, you need to know what inventory is. And you need to know what cost basis is. Because if you don't know what cost basis is, how are you going to trade? You buy one contract at $1, another one at $2. What's your cost basis? Thanks, Anne-Marie. I appreciate it. Any big plans for the long weekend? Are you going anywhere exotic? Me, I love a 4th of July barbecue. Sleep? Oh, I guess you can tell we're over a certain age, eh, Anne-Marie? Oh, okay, we're going to open on a gap. Sorry, she made me laugh. Before I forget, right? We're going to open on a gap. That's what I love being in the States on the 4th. I love a good 4th of July barbecue, some fireworks. It's great fun. Wonderful times. Everyone's in a good mood. It's great. And potato salad. You know, they don't have potato salad in the UK. Raj, what's up with that? I guess it's just not a thing over here. Of course, that's all stuff my girlfriend will kill me if she catches me eating. But exactly, right? Okay, we're going to open here in about 20 seconds. And we're going to open on a fairly sizable gap, ladies and gentlemen. So be careful about that. Now, sometimes in this market, it takes a while to fill a gap. The reason is because it takes a while for the buyers to get exhausted. And then the sellers have to put it on sale. Let's see if we take out that overnight high. If we do, it'll be a little bit of a stop run higher. Oh no, let's have holidays, Tilt. I don't want to trade on the weekend. You must be very young. You want to work all the time. That's commendable. I imagine one day it will be. The markets will never close. Right? Right. So running that overnight high, that's going to bring in a little buying. Let's see if there's enough buying to sustain it over 96. My next level up is 99 and 3/4. I imagine eventually markets will be 24/7, you know, just like crypto. I think crypto is changing the way a lot of people think. As many people who don't like crypto, and I actually never disliked crypto, I always thought it was a scam. And then the more I learned about it, there's 99 and 3/4. The more I learned about it, I was like, oh, this is interesting, right? I better learn about this. And I do think it's going to change finance. Now, finance doesn't like change, right? Old rich people don't like to change things, right? They have their pool and they don't want you peeing in their pool, right? But the crypto kids, they're shaking things up. And I think that 24-hour trading, it's going to be coming to these markets. So 63.01 and a quarter, that level worked. Please don't short this thing until we find a seller. Now the sellers are there, but they're just kind of hiding in the bushes and selling. They're not being out front about it. The next level I have, and it's a major level, and I really hope we don't get there today, is 63.06 and a quarter. And that's one of my COVID levels, which we're not that far away from now. Dear Lord. I don't have any levels over 63.09 and a half, which means I didn't really think we'd get this high before the 4th. So we'll just use these for now, and then I'll fill in the other ones. Yeah. I think big changes are coming to these markets. Even though they don't want to change, I think it's going to be forced. Backfilling now. And only 2-to-1 breath, eh, Jeff? Yeah, I don't see a seller yet, ladies and gentlemen. Let's see if we get one at 5 and a quarter. Now, 5 and a quarter will be 4 times cost basis. So, and I know what you're thinking, and you're right, that the markets are insanely extended. But let me ask you something. Is anyone around to sell? I mean, other than the people who own inventory between 74 and 86, and they'll sell, but they'll sell lightly, right? They'll sell on the way up so they don't scare away the buyers, right? And these candle patterns, now I don't know what you guys call this, but when a market, the lows just keep getting higher and higher and higher, and you get like a 1 minute correction and then these big candles, it's impossible to short that because nobody's putting anything on sale, right? And I know what it's like when you're shorting. You sell a little bit. Next thing you know, it's 3 points higher, and you sell a little more, and you sell a little more, and you just keep selling, thinking, oh, it's got to crack. But that's the problem with these markets. They don't crack like that. They don't crack like markets of the olden days. Right? They don't sell off like old markets. Remember, Anne Marie? You used to be able to sell a stock, you used to be able to sell it, and you'd sell it and it would just drop, right? Now it drops like it's like it's stuck. Like there's glue on it and it just kind of it it's like trying to close a suitcase that's got too much clothing on it. It's in it. It just like sticks. And that's because there's so much of a short bid. It's very annoying. Because it takes all the joy of shorting away, right? It used to be very satisfying to sell something and just watch it drop. Now it kind of drops and sticks and bounces. That's like, oh, good Lord. It's it's the most annoying market to short. But if you look at the way they've structured it, the way they've built it, the way they've built finance and the revenue generation model of the US capital markets, if you look at how that's all put together, it's really it's intended for people just to go long and never short this thing, right? And in order to short it on any kind of a position term, you have to have heaps of money and the ability to sleep at night being out of the money a lot. So we stopped at 4.5. There's a little bit of a seller here, but I'm just watching the offer, right? See how it stops, but it sticks, right? It doesn't sell off cleanly. And that's because of electronic execution. Because electronic execution doesn't freak out when it runs out of buyers. It just slowly goes and finds the buyer and then lifts the offer and then does that again. Whereas a human being, right here, if there was a human trader on this, they'd start hitting all the bids. They'd be like, oh, we ran out of buyers, boom, 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 right? But because the humans are not in charge anymore, the machines don't have that emotional response when the buying slows down. They're patient because they're machines. And they'll wait for the buyer and just see how it's lifting the offer. And that's how you trap people. So 5.25 worked. Now let's see if we get any kind of liquidation. Right? We're going to need more than 2 red candles, Mr. Market. Why do we naturally want to short? Because they made it sexy. They made movies like The Big Short. Right? That movie, I think, is responsible for getting so many retail traders upside down. But what they don't realize is the people who were shorting in that movie had funds. They were trading other people's money. And some of them corralled their investors so their investors couldn't take their money out. Like Dr. Michael, whatever his name is, right? The rock and roll guy, right? Played by Batman, right? He shut off his funds so his investors couldn't get their money out. They sued him. If his short hadn't worked, Burry, that's it. Thanks, Anne-Marie. If he hadn't walled off his fund, he would have faced redemptions and ruin. If that trade hadn't worked out, his butt would have been home fried, not just cooked. But we as retail traders, we don't have infinite amounts of money to keep meeting margin calls. That's what they don't tell people. So people go and try and mimic that in real life, and they just get destroyed. It's horrible. There we go. So if you're short like 4.5, now you're going to be looking for bids. I'd say here, just under 6,300. Let's see, short the backfill. Now when you're short, put some buy orders out. And if those buy orders don't get executed, they don't. There's not enough supply, so be careful. Right? And you're right, Raj. When they changed equity settlement from T+3 to T+2 to T+1, right? It changed a lot of the way this market trades. Right? It's been noticeably harder to short ever since they changed equity settlement. So this is a back end of the move. Front end, back end. No, stocks don't self-clear, Agatha. They clear through the depository trust and Seed and Company. Keep it family friendly, Tilt. I don't want to get canceled. Right? See how it found some bids right where we were looking for them? No problem. Just don't get me into trouble like Don Cherry. I don't want to get canceled. Keep it family friendly. Thank you. Oh, oh, cool. Thanks, Jeff. Thank you. Now, you know what? These days you get into trouble just for everything, you know, Tilt? I mean, by God, the way we used to talk at work on a trading desk, they'd throw us in jail now. Okay, we got a seller right there. Sellers are at 3.25. They stopped selling just under 6,300 or just at 6,300, right? So if the market starts lifting over 63.25, like there, and printing, then you know you're in a little bit of trouble if you're short. So it 1, 2, 3, 4, 5. We actually had 5 minutes of selling. Right? That might be a new record. Oh, here's another sell order. Great. Good, good, good. Now, a lot of people will be shorting this. Oh, is there data in 1 minute? Cool. Maybe that'll shake some of this inventory loose. That would be very helpful. Nice work, Agatha. Take those profits. See? There's 5.25 again. And they're running the stops over 6. Now, if you're a breakout trader, these levels can help. Right? You want to wait for the next candle. Like, say you want to buy the breakout. Right? Even though the size sellers are selling into this because that's what breakouts are for. Right? Breakouts create liquidity for size sellers to sell their goods. They create buying. So if you're a breakout trader, wait until the market holds over 63.06. Otherwise, you could end up getting flushed out if you buy a false breakout. I've never had success buying breakouts because I've always been taught to sell into the breakout. Not short, but sell your stock or your inventory into that breakout. Now, what's the business reason behind that? Breakouts create buying. Why? Because they trigger the stops from short orders, from short sellers. Yeah, we'll see, Patty. That first half hour when we have a big gap up is hard for the look above and fail. Now this next candle that opens should stay over 5.25. Should stay over 6. Nice trade, Dougie. Nice trade. See how choppy it is? That doesn't instill confidence when you're trying to go long. Right? It kind of sucks you into going short. So what I've learned to do is watch the offer. See how it came down just under 6 and started to lift? So if you had bought 6 against 5.25, put some offers out just under 9, like 8.75. Because if you get a pop, then you'll get filled. Now this pre-holiday action, right? The pre-holiday customer traffic isn't the greatest. So that's why it's not smooth. It's walking up the stairs, but it's stumbling. Uh, at well, we're 8 points above it right now, Patty Lou. So I don't know. There were buyers there before. Whether there are buyers there again, I'm not sure when we get down there. It depends on how. If we get down there slowly, definitely. But if we move down to 62.99 3/4 quickly, those bids might pull really quick. See what I meant when I said to go long and put your orders at 8.75? Just underneath 9. So when the market went up, you would have gotten an execution because you would have been in line. Now you can use the level where the sellers were before to see if they re-enter again. So, Patty, let's use 63.05 as an example, right? So there was a little bit of buying here before. So what you want to do, Patty, is you want to wait for the market to do this. So if you were using 29.75 here, you would look for this trade. You wouldn't just preemptively put a buy in. You'd want to see the reaction at that level before you actually executed. Does that make sense? Hola. What the heck? Ush. It's not a fun market to short. And we took out 6306. Like it wasn't even there. Like it wasn't even there. Nice work, Scalp King. The question you have to ask yourself, folks, how many people do you think are short underneath 6284? Oh, is he? Yep. Remember, markets close early. Now, going to distribute a little bit between 10 and 12, 9 and 12, right? Dealers would have had to take in inventory at 7, at 6, at 5. This is a great way for them to get rid of some of it here. And if they hold the market steady long enough, buyers will come in. Once again, I do not see any reason to short this at this time. Okay? If you're shorting the backfill, that's fine, but make sure your risk, really watch your risk, especially on a short trading day before a long weekend. Hey, Gigi, what's going on? Equity fireworks, exactly. Right? And you don't have to, you know, take the truck and go to another state where they're legal to get them. Can I talk about blow off tops? I haven't really seen a blow off top. Not in these markets. Blow off tops are more likely in, like, those cheap stocks. That's pill. So the blow off top is created generally when you hit a certain level, you run out of buyers, and everybody who's long just dumps. But we don't really see that in this market because of the way they're structured. Right? You'll see that more likely in a stock market, like in a stock like, remember that MOGO yesterday? They ran it up to $4 pre-market, gapped it, sucked in everybody, and then they just hammered it back down to $2. Right? That's more of a blow-off top. Right? But they made it. I mean, the insiders easily booked $300 million yesterday because it traded $700 million worth of paper. They would have put at least $300 to $400 million in their jeans yesterday. Maybe 350 after expenses. That's a good day. Yeah, folks, if you want to make real money in the market, do deals. Trading is beautiful, but deals are where the real, that's, that's where the cabbage is, right? That's where these guys are making 50, 100, 200 million in a day. It's by selling massive amounts of stock into retail buying. What's the flavor of the day today? Yesterday was a great liquidity day for those guys. They sold probably $300-400 million worth of stock yesterday, and right now they've probably gotten their wires because it's T+1, and they're off. Private placements and the best way to do it is convertible financings, where you finance a company at a discount, you get stock at a deep discount. Hey, Elliot, what's going on? How are you? Adjusting back to life back in the East? It's good to see you, man. Holy cow, it's been months. They've got you busy. That's good. Yeah, give me a buzz when you have time. We'll have a talk. Well, this short squeeze is just unfair. Another little backfill short. I chose ES uh, before NQ because it's a thicker market. It's a little bit more. Um, it's a little calmer. Um, I just like the stability of it, and I just got to know it really well. YM, I've actually never looked at. It's funny. I remember when the Dow crossed 10,000, and everybody made such a big deal about it. If Anne Marie's still on, I don't know if you remember that when the Dow crossed 10,000. They gave out baseball hats and everything. What's it at now? 30K, and nobody even talks about it. NQ attracts. I think the NQ attracts a much younger trader, right? They like the action. And probably if I was 20, I might trade NQ. But I like ES because the ES pays me if I respect it. Right? I can make money trading the ES if I respect it. For me, the NQ is too thin. Now, having said that, in our room at the Trading Syndicate, we have people who do make money trading the NQ. But they've got the scars to show it. They've paid their dues. Do they decide just one morning to sell their stock? No, Wicca. All of that is planned. It takes months and sometimes years of planning before an operation comes together. Sometimes we'll work on deals for 6-8 months, a year before, and when we light them up, that's when the retail comes in, and that's when we have to capture that retail buying and turn our worthless stock into cash. Buying campaigns are planned, right? Everything is pre-planned. So they don't just decide one morning to blow off their stock. They're elaborate schemes. Trust me, I'm usually at the heart of those schemes. Or I was. Yeah, there are guys who trade bonds and treasuries. I have no idea what that's like. Never even looked at them. Rasto, there you are. Um, well, algos run the show all the time, my friend, now. But more choppy, yes. Well, this is not choppy. This is trend up. So, since the open, there has not been chop. It's just been pure, pure psychotic trend up, right? There's very little human trading now. Think about it. All execution is electronic, right? Human traders are a liability, right? We sleep in, we get mad, they get drunk, they get thrown in jail. You have to bail them out of jail at 3 in the morning. You have to put them in rehab. Algos, you don't have any of that, right? You just got a nice little server. It behaves itself. It shows up for work every day. If there's an issue, you just swap it out, right? So the people, where the money is made now are the people who write all that code, you know. The business model is still the same. It's just a million times more efficient now than it was, right? So in the old days, I'd be sitting there going, okay, we ran out of buyers at 18. So what I'm going to do is I'm going to sell the market down to 16. And when I see a buyer, I'm going to lift my offer, right? But now the software does it automatically. So if it gets to 16 and there's no buyers at 16, it will simply just go and hit all the lower bids until it finds a size buyer, and then it'll lift. Right? So it got down here just under 16, found buyers, and now they're making the buyers pay more by lifting the offer. And this is all algorithmic. It's all electronic because it's so much more efficient to do it this way than to have a human being on a phone or even a human being typing in things on a keyboard. Will never be able to keep up with the efficiency of electronic execution. That that software will do 300 trades before we do one or two. It's just it's progress, right? Just like automation in anything, right? Amazon doesn't even have people carrying boxes anymore. It's all robots. Same thing. The business hasn't changed. You order a parcel and the parcel gets delivered. Now it's just taking the humans out for efficiency. Here, the parcel is an ES contract, and it's being delivered electronically instead of having some guy hand it to you. It's really the same thing because this is a market, right? They're handing you a product. There will be new money coming in this quarter, S-Pill, but really all the big money is in the Hamptons. Right? I'm sure people are picking away and stuff like that, but it's a half day too, right? See, one thing I'm going to tell you folks, right? Little secret, okay? When it comes to holidays and things like that, and if Anne-Marie's still around or anyone who's ever worked in the industry or been around people who work in the industry, they'll tell you this. People who have a lot of money and trade size, they're not desperate. So when a new quarter comes up, they will assess things before they start executing. They don't just come out of the gate like a racehorse. You know what I mean? That's a retail thing. When you have vast amounts of cash, there is no desperation. And retail traders are always desperate. That's why we lose money, because we have that desperation. Right? Anytime you get desperate, they've got you. Right? There's no desperation to put money to work. Right? Have you ever gone, by the way, we're just creeping higher, nothing really to report. Have you ever gone and tried to pitch an idea to someone who's a billionaire? Right? You go and you bring them a business idea. They kind of look at you like you smell, right? And they crumble their nose up and they're like, ew, what do you want? Right? They're not like really all over it, like a kid on a chocolate bar. Right? They're like, oh, great idea, let's invest. That's not going to happen. Does that make sense, S-Pill? They're going to take their time, and they're going to assess the situation. And they have analysts that look at things and assess the macro, right? And remember, yeah, the real secret is desperate money always loses. So don't trade in a state of desperation. The more desperate you are, the more money you're going to lose. It's proven. Because what it does is it clouds your judgment and you don't see the forest for the trees. You don't see obvious things when you're desperate because you're not in full control of your faculties. That's why we want you to come hang out with us in our room so we can teach you not to be desperate. We can teach you the skills that you need that are practical to make a living, right? And that's what we try and do every day. It's discipline, right? That desperation just, it's almost like, you know how a dog can smell fear, right? It knows when it's scared, when you're scared of it. The market can smell desperation. Anytime I've done a trade, anytime I've done a business deal, and I've thought to myself, oh my God, I need this to work, I need the money, right? I've got to pay the rent, I've got this, I've got to pay this, whatever it is, I need the money, so I hope this deal works out. Every time that thought has been in my head, the trade, the deal always goes south. It's like clockwork, right? So that's what we really want to teach you at the Trading Syndicate. We want to teach you how to have a business plan so you don't have to be desperate, right? So you understand the business, and we use, if this happens, then we do this. If this doesn't happen, then they don't get our money, right? So everything is that we teach you, right? Exactly. It's just like Steve says, right? Trade that A plus, right? Exactly, right? That is 100%. Trade your A plus setup and let everybody else chase their tail. See, this is a little distribution here. Little distribution. Right? And if not, sit out. Yeah. Look at that. The point of control is all the way up at 63.18. Check it out. They're coming for it hot and heavy up here. So, speaking of our room, use that code in the banner below to get 25% off. It's less than 50 cents a day. And when you do join up, please DM me, or if you're thinking of joining, DM me. If you need help over the weekend, DM me. I'm around. right? And we just want to help normal people on their trading journey. This morning I had one of our guys, he reached out and he was so happy he got a job on the market making desk at Barclays, right? And that's great, but you don't have to want to work in the industry for us to help you. If you just are a regular person and you just want to make a living and you're tired of losing money, right? If you're tired of making bad business decisions, right, using indicators and being sold software, I'll teach you how to trade with just one chart. No, market making is nothing like what we do here. It's a completely different business. Market making means you're providing liquidity. So, Jaijan, if you come to me and say, I want 10,000 shares of Microsoft, and you're a good customer, if I don't have 10,000 shares of Microsoft in my inventory, I will sell it to you short and then try and buy it back to complete your transaction. So you get the stock you want at the price you want, so you come back to me for the next trade. Now you're a retail trader. Your job is to buy something and sell it at a higher price. It's a completely different job than providing liquidity. So if there were no market makers, you'd get 1,000 shares at whatever the price and 1,000 shares higher and all over the place, and 500 shares, $4 up, right? So market making is about providing liquidity. Liquidity is the ability to transact size without adversely affecting price. So if I want to buy 1 million shares of a stock and it only trades 100,000 shares a day, well, I've got a bit of a problem because it's not a liquid market. Now let's see. Yes, I had market makers working for me, right? They would show me bids. So if my client had 20 million shares of a stock to sell, and I tell the market maker, look, I have an interest, when that market maker got a buy order, he would call me and say, hey, I can buy 100,000 shares, I can buy 200,000 shares, and I'd sell him those 100 or 200,000 shares, and if he was willing to pay $1, I'd sell it at 97 cents. If he was willing to pay $5 for 100,000 shares, I'd sell him 100,000 shares at $4.97 or 96 cents. So he always made $3,000 or $4,000 for picking up the phone and calling me. We're looking for bids at 63.15 right here. So they like calling JJ because they know they're going to make 2, 3, 4, 5 grand every time I pick up the phone and say hello. The market maker is going to make 3 grand, 4 grand. So they like to call me. The time point of control just tells me how long the market has stayed at that price. The way I look at it is it takes time to accumulate volume, and then it takes time to distribute volume. You use them together. But I don't spend a lot of time looking at that stuff, Alessandro, because my trading is actually done from the 1-minute candle chart. The TPO chart tells me a few things. It tells me if there's a poor high or a poor low. It tells me where there could be buying, because you know why there's buying here? Because anybody who was using that A high as a stop who was short, when the market goes up and comes back down, they'll put some buy orders here. So I know to expect bids here when the market comes back down. See, there they are. That's why I was able to tell you a few minutes ago to look for 15 bids, and there they are. So that's practical use of market profile. Time points of control, volume points of control, they're interesting, but they don't actually help you make money. There's a lot of market profile stuff that's very, very tactical. Poor high, poor low, right? Poor high, poor low. Single prints, and where's the inventory, right? Also, where are the stops? So when we took that stop, it created buying. When you retest that level, there will be unfilled buy orders that cause what you guys call support. So those are really the four things from market profile that you take away, right? A poor high means competitive selling. A poor low means competitive buying. What's the practical takeaway? Don't buy a poor high, don't short a poor low. Simple. Right? Now, market profile, you can talk about things forever about it, but it's not going to make you any money. You want to execute off the candle because there's your buy, there's your stop. What's the business reason? Nobody has to sell under 9.25. So if I buy 10 and I put my stop at 9, if somebody offers it for sale at 8, then my business reason for being long is no longer valid, and I'm gone. I exit the trade. Very simple. Right? Any trading person who's trying to teach you, they should be able to explain why the trade works. What's the business reason for the trade? There has to be a valid business reason for the trade. If there isn't, you wouldn't put your money to work. If somebody came with you with some crazy idea, right? Would you invest in it? Right? It's just different data feeds, George. I wouldn't worry about it too much. That's why I don't really look at the volume that much. Because one data feed will have completely different volume from another data feed. It's a dog's breakfast. Futures, like in equities, they all get their data from the exchange, right? In futures, they get their data, but then they do something. They put it in a database, each different vendor. So one data feed will have completely different volume than another one. It's annoying, I find, right? Just like they'll have different symbols, right? Like one data feed will have f.us.epu25. Another one will have a completely different feed. So don't worry about it too much. So how is that useful to know where the bids are? Well, if you were short, say, 19, right? If you were short 18 or 19, when it got down and couldn't take out the 15s, you got to cover before it turns around and takes your profit. Practical information, and that's what we do at the Trading Syndicate. We want you to have practical information that you can use in real time to make a buck, right? And also so you don't lose a lot of money, right? It's important that you don't lose a lot of money, because the trick to this business that the savage old men and women who taught me this business, and I'm talking savage people, they taught me to not lose money. Because even if you don't make a lot of money today, you still have to have capital to operate tomorrow. If you blow up your accounts today, you have nothing to work with tomorrow, right? Longevity is the trick to this business. The longer you're around, eventually you'll start making money, right? You'll start to learn, right? We want to try and help you close that gap, right? Try and give you information that you can use practically every day, that you can learn, and that you can build your skill with. So we have real-time execution to show you how to execute, right? How to build your execution skills So you're executing so it looks like you're trading in the zone, right? So you're doing it smoothly. So you're not fumbling around, right? Each trade is planned out before it happens. So you're not just running around chasing trades, right? Like a dog chasing a ball, right? This way, you're in control of your circumstances because you don't have any control above the market, right? The only thing you can do is control how you do business. Oh my goodness. I'll have some, after I get off YouTube here, I'll post some levels between here and 63.50. And I'll get those posted on X and also in the room. Oh. Hey Leslie, how you doing? Oh, that's TradingView. That's cool. It's very colorful. 6,500 is the new 1,800. Oh. It's funny that he said that because 6306 is the next zone, right? That's the bottom of the next zone is 6306. The top of that zone is 6547 and a half. So that's a long-term target. The next major target up I have is 63.49 and a quarter. But let's not get there today, shall we? Do market makers still operate the same way today as they did in the old days? The business is still the same, but it's completely automated. So you know, think of a place that, like if you went to McDonald's, right? And there were no employees, but you could get your burger in less than 30 seconds. That's what market making is now. Market makers don't create anything, they just hand you the burger, they hand you the donut. And that is an automated process now. So they completely operate in different ways due to technology. However, the business is still the same. Does that make sense? They're still handing you a product, but the efficiency in the delivery of that product to you is exponentially better than it was 20 years ago. Right? It's literally exponentially faster because of technology. But the business is still the same. Right? Somebody creates the donut, the market maker takes the donut and hands it to the person who wants to buy it. That process is now all electronic. The chart that you see, folks, these charts, they're just a sales chart that tell you how donut sales are going here on a 1-minute time frame, here on a 30-minute time frame. That's all that is. This is a sales chart. This is showing you how the distribution of ES contracts is going on a minute by minute by minute time frame. Here it's showing you every 30 minutes how the distribution of ES contracts is. These are just sales charts. Nothing more than that. So the sales chart is trying to tell us where the buyers are and where the sellers are. That frog, having a job sucks. You're hilarious, man. I kind of, I sometimes I do miss going into an office every day. I got to admit, I mean, I had a lot of fun at work. I loved going to work every day. And most of the jobs I had, all the jobs that I had in the market, except when I worked for that guy who looked like Colonel Sanders, right? Other than that, I used to love going to work. It was fun. I thoroughly enjoyed every minute of it. Miss it every day. I miss the trade desk. I miss working with people and having fun and laughing. Yeah, on a short session, S-Pill, that's a nice trade, right? That's a very nice trade, right? Look at these candles. Look how they line up perfectly, right? You could sell, there's a 63.20 seller, and they stop selling when we get just under 63.19. That, my friends, is distribution. It's very slow. So as I leave you, right, now we're going to have single prints. And this is another thing in market profile that's very useful. Single prints will show you where the short position is in a market. So when the next period opens here in 30 seconds, this green box will tell you where the shorts are trapped. Right? It's very visual. So you know if you're shorting and you come down to the bottom of that area to expect bids. Or if you're going long and the market can't get into this box, you go long, put your stop a couple of ticks here, and ride the move higher. Right now with this sort of barcode, I wouldn't touch this right now. I would leave it alone. Let's see what the next period does. Here we go. So that's your short position. 15 half to 19 quarter. If the market fills that short position, it'll move the box lower, right? Eventually it'll find a bid and then rotate higher. Right? No drama. Exactly. All right, folks. There'll be no streams tomorrow as the markets are closed. Please have a safe and wonderful 4th of July. Thank you so much for being with me this week. We'll be back on Monday. And have a wonderful long weekend. That's a poor high. That's another little piece of market profile. So sellers are competing here. Shorts are trapped here. So look for chop like this now. Okay? Have a wonderful long weekend. Thank you so much. We'll see you on Monday. I'm JJ, and please come check us out at thetradingsyndicate.org. Have a wonderful, wonderful long weekend. Thank you so much. Bye for now.